Hello, good afternoon. You're watching Closing Trades on ET now. I am Anisha Jain. With me, Somit Sarkar. And the closing trades are looking healthier than what we started the day with because 19,400 was scaled on an intraday basis. Yes, we have slipped below that mark yet again, but nonetheless, just around that mark as far as 19,400 is concerned. In terms of the various sectors and stock-specific action, banking names are actually doing okay. So the banking index is just around the flat line, and the broader markets too are mirroring the move that we saw in the large cap pairs. So pretty much an even Steven kind of day. Pharma is the outlier today, so Pharma pack led by Sun Pharma etc. is doing okay. Gland Pharma forces the result reaction, and quite a bit of meaningful uptick is what we also saw in Piramal Pharma. So that space is doing okay. Realty, after many days of uptick, is finally taking a pause today. So a bit of profit booking as far as the real estate sector is concerned, because that is one of the key drags at the sectoral level. Mild gain scenes in metal as well as PSU banking names as well. And if I had to pull up individual stocks, want to highlight the underperformance of Reliance today. That stock is down 0.6%, and that's dragging the markets by almost 12 points when it comes to the Nifty. HDFC Bank, ICICI Bank are the other two key drags, and we should pull up the intraday charts of these stocks because right now they're sitting close to the lower end of the trading range that we have seen. Separately on the gaining side, SBI is perking up, Sun Pharma as I pointed out, and Axis Bank. So see, these are some of the key gainers in the trading session right now. But what about the technicals of the market, and where do we go from here on? We have Kush Bora as well as Kunal Bothra joining us to talk to us about that. Kush, let me first come to you if you can hear me. Okay, so in the meantime, let me just take a look at some of the other big buzzes as well while we get the guests ready to talk to us about the about the fundamentals and technicals of the market. In terms of big gainers, take a look at JSW Infrastructure. That stock has rallied 10%. The numbers were out a couple of days ago. Very strong performance, almost a 25-30% growth. That got a thumbs up from the street. We had seen a 10% up move then, and today as well it's continuing. Actually, if we can, let's pull up the 5-day chart and see the kind of gains we have seen on JSW Infrastructure. And that's been the nature of the market right now in terms of the IPO market. Whatever was priced well is getting a thumbs up from street. JSW Infrastructure, I beg your pardon, up around 18% in the 7 days. Let's also take a look at Honasa Consumer, the latest kid on the block. Got listed, a bit of tempered listing, not a hoorah listing at all. 330 thereabouts was the first tick that we saw on that one. Manages to hold on to 337. You also have Trend that just reported its earnings. Very strong improvement, Somit, as far as the earnings are concerned of Trend. And that's the reason that stock is higher by 6%. And HPCL too. I think the commentary was something that the street liked.
Well, on the HPCL front, the street was too much excited about the Lube's IPO, but actually the most important commentary was coming in on the capital expenditure side. They said that their capital expenditure will be around 75,000 crore, but more importantly, they won't raise any more debt going forward. Now, increasing debt for HPCL was one of the concern, and they have said indirectly in the call that the debt has peaked, and that's the reason we are seeing such kind of an up move when it comes to HPCL. Apart from that, there is Som Distilleries, that is one stock that has been declining in trade, around 10% downtick that we are seeing, and this is after media reports which are suggesting that there have been some income tax raids on the company's office. Now, after failed QIP, this is another concern coming on for Som Distilleries. So, Kunal, Som Distilleries, have you looked at that chart? The stock is down 10 odd %. Earlier we had seen such an upsurge in the share prices, but for the last 1 month failed QIP and then this IT tax raid.
So yeah, I think the stock seems to be, it's more like a one-off because it's not impacting most of the other stocks from the liquor space. United Spirits, Radico, etc. These stocks are still looking quite attractive and sturdy on the chart. So I would probably expect that this could be just a one-off in terms of price action. But this could also mean that possibly if the stock comes close to this 280 mark, so another 10-15 rupees on the downside, I would believe that that could be a good territory to go for a contra buy on Som Distilleries. The longer term retracement, Fibonacci retracement supports, they line up closer to 275 to 80 mark for Som Distilleries. So I would actually be a buyer in case the stock dips down another 15-20 rupees odd.
Okay, will be a buyer if it dips by 15-20 rupees. But Kush, before I take your index calls, let me actually get into stock-specific discussion because Trent is one stock that deserves mention. After that solid surge in performance, the stock is also seeing quite a bit of an up move. And Alchem Labs too, the numbers getting a thumbs up from the street. Anything on the charts?
Hi guys, thank you for having me on the show. Well, incidentally, Alchem Labs was, a call in our advisory service as well 2 days back, and glad to say that it's hit all the targets. We don't see this momentum subsiding anytime soon, by the way, because if you look at some of the setups on some of the momentum indicators, I think the rally's perhaps just begun, despite the kind of sharp up move that we've seen from 35-50 kind of levels. So my suggestion on this one would be ride the wave. There's still a lot of upside left on this. In the near term, 4100 is the level that we're looking at as the first target on the upside now. And once that is taken out, 4250 is something that the stock could hit. The best way to play this one would be a trailing stop loss, 3875. Here's where I would place my stop loss. So that's the word on Alchem Labs. As far as trend goes, again, this stock's been in a spectacular up move. It could be nearing an up the near-term upside from here on. So my suggestion would be probably take some money home and buy on dips. A good entry point on trend would be 2250. If the stock does come back to those levels, then perhaps a good entry point. Otherwise, just take some money home. It will not be a bad idea to book some profits on trend right now.
Profits as far as trend is concerned. Thanks, Kush, for that call. But we're joined by management. Info had just reported its earnings, and it was a decent show because the revenue jumped up quite a bit, almost a 12% growth coming in on a standalone basis. And overall, the billings for the company has also increased by around 5%. Hitesh Oberoi, the MD and CEO of InfoEdge, joins us on the show now. Hitesh, hi, good to have you on board. Let's begin by discussing the IT hirings because that has been the pain point, and the IT hirings were something that were impacting your billings. What's the latest you see on the ground? Any improvement or status quo?
No, IT hiring, like you said, has been slow for the last 3 quarters now. And we are not seeing much change on the ground at the moment. We are hoping that things will start getting better a couple of months from now, because companies had hired, more than their requirements last year. And slowly, sort of, because of attrition, they've been losing people. And hopefully there will come a point in time when they have to start hiring once again. So we are expecting that to happen 3-4 months from now, but fingers crossed on that one.
About the IT hiring, not looking too good right now, but overall the non-IT hiring and the overall, if you can give me the number of Naukri billings, because I don't think we have those presentation details yet. If you can help me with the number.
Yeah, so the non-IT market, hiring market continues to be buoyant. About half our revenue comes from non-IT hiring. So sectors like real estate, construction, telecom, hospitality, travel, tourism, healthcare, these have been doing well for us. Banking, financial services, insurance. We continue to see strong growth on the hiring front in these sort of segments. But like I said, the IT market has been hit, and it's been hit hard. Early signs, in some cases, we are seeing some sort of a recovery, but very, very early. So can't say whether this is going to last and whether things will get better going forward. The Naukri business, the overall recruitment business has been sort of flattish for us this quarter.
99 acres side, we have been seeing that the losses are continuously reducing, but how is the competitive intensity that you're seeing? Is it still very high, or has there been any kind of slowdown when it, in fact, a reduction in competitive intensity?
In 99 acres?
Yeah.
No, the real estate market has been doing well. We have been executing well. We've seen strong growth in our real estate business for almost 7 quarters now. And our losses have also reduced significantly. Competitive intensity continues to be high, but our team is executing well. We actually generated a small cash profit this quarter in 99 acres. But fingers crossed on how things will play out going forward. Right now, it looks solid. And, the real estate market, as you know, was down for many years. And we've seen some sort of a recovery for the last almost 7-8 quarters now. Prices are high, inventory is low, new launches are selling. So right now, things look rosy, and, we are happy with our performance, but fingers crossed.
And I think there is some improvement as far as Jeevansati is concerned as well. The traffic seems to be inching higher. Can you talk to me about what are you doing there to seek this kind of improvement? Are you investing a lot more in terms of your marketing spends? Because that too had been inching higher.
Actually, in Jeevansati also, we changed our strategy about a year ago. We moved to a freemium model. And as a result, our revenues took a hit for about 4 quarters. We saw a 30% decline in top line because we moved to a freemium model. But what the freemium model has helped us do is gain traffic share. And we are sort of a very strong player now in the north. And now we are at a point where we think we can focus a lot more on monetization. Because we are now on a freemium model, we are not actually spending as much money on marketing as we were earlier. In fact, our marketing spend is down almost 40-45% compared to a year ago. And now we are working hard on getting the monetization on our platform up. So again, we are happy with the performance in Jeevan Sathi this year. We've cut burn by almost 50%. And we are working hard on getting our revenue growth back on track. Let's see what happens going forward.
Overall, at the company level, what would you say is the trajectory for margins that we should expect? Because, okay, for Jeevan Sathi, the spends have been coming down for marketing. But for the overall business, what should we expect in terms of margins going forward?
A lot will depend on what happens to IT hiring, because that's a big part of our revenue in Naukri. And Naukri is, of course, 70-80% of our business, and all our money is made in Naukri. If IT hiring bounces back by Q4, then, it's a very different scenario. On the other hand, IT continues to be stressed for the next 2-3 quarters, then things will look very different. We don't want to slow down on our investments in 99 acres. We want to continue investing in our Naukri business from a long-term standpoint. So we don't want to really manage margins in the short term, and therefore a lot will depend on what happens to top-line growth. Our investments will continue.
Coming back to 99 acres, in the previous quarter, we had seen some moderation in the realization front. Has that improved in the second quarter?
So we are not seeing any pressure on pricing. It's just that companies are hiring a lot less than earlier. Attrition rates in most IT companies, which were at maybe about 20% levels, 22% levels about a year ago, are now down to 13-14%. The startup market has also been very badly hit. So that's resulting in lower volumes more than anything else. Pricing has not really been under pressure. Of course, in a slow market, you end up giving a couple of percentage points of extra discount. But that, will come back when the market bounces back.
The question was on 99 acres. Last quarter, we had seen a moderation in the realizations. So has that improved? And how has been the user addition as well in the second quarter?
Actually, 99 acres is firing on all fronts. Our broker business is doing very well. So we've added a lot of new customers, and our ARPUs are also improving. The builder business continues to be under a little bit of pressure because here we need to get our product right. We're working hard on that one. Maybe another 6 months before we get that business back on track. But on the broker side and on the owner side, the business continues to execute excellently, and we are seeing both an increase in ARPUs and increase in customer base.
Just before I let you go, I know it's a bit of a crystal ball gazing, but your own assessment in terms of for Naukri, this year is going to be flat to slightly negative. And when do you see the recovery when it comes to IT hirings? Do you think it'll bounce back at the start of next calendar year, or realistically we should expect that maybe by mid of next year we'll start things stabilizing a bit?
Very hard for me to say, because the IT market is more indexed to what happens in the US than to what happens in India. So we've seen, on the ground, what we can see is that, the global capability centers, they are growing. The number of centers are growing, and the headcount per center is also growing. But that's a very tiny part of the entire IT piece. Indian IT services companies have been hit very badly, especially the large ones. And in our senses, that they had overhired last year, because last year was boom time for IT hiring. And they're slowly sort of getting back on track. And a lot will depend on whether they're able to win more projects going forward, and they have they've been publicly talking about a strong deal pipeline, but that has to translate into hiring on the ground. Many of them are actually not going to campus this year to hire, which actually may work to our advantage in the medium term if the market bounces back, because they'll have to hire laterally, which is where we play a role. But fingers crossed, when the market will come back. We have no way of knowing when that will happen. Now, we are all expecting and hoping that it'll happen sometime in the next 3-4 months, because it's been quite some time since the market slowed down. And normally, what we've seen is that India is actually part of the solution. It's not really the problem. When companies want to cut costs in the US, they end up hiring more in India. And after every slowdown, normally we see a very sharp recovery after 3-4 quarters. But till it happens, we don't know. We can't be sure.
And I have to ask you, Zomato has already doubled, almost tripled this year. Any temptation to sell some stake?
We are long term. We've been believers in the Zomato and Policybazaar story. We've been investors in these companies for almost 15 years now. These companies continue to execute strongly. They are both gaining share. They are both inching towards profitability. We are still very, very bullish on these businesses.
Okay, Tesh, on that note, we'll let you go. Appreciate you making time and speaking with ET now. But time now to slip into a very short break. Don't go anywhere. We'll track the last 45 minutes of trading session when we come back. Welcome back. Well, in the last few minutes, we have seen result reaction. Let's pull up the stock of Newland Laboratories because that stock is seeing quite a bit of surge. In fact, it's now 16% higher as far as that stock is concerned. Solid earnings clearly because that is what the street is liking at this point of time. Very good numbers, and that's why that stock is higher by 16%. The other one is, of course, Trent. That too is seeing quite a bit of result reaction, 7% higher. And then there is gains building up on RR Kabul as well. Of course, the margins had expanded quite a bit there as well, almost to 7-8% levels now. So that stock was higher by 9%. Jyoti Labs is the other one. BSE has surged almost 7%. JSW Infrastructure, as we talked about, has been gaining 10%. In fact, before I welcome Jitendra Arora, let me toss it to Kunal. Kunal, if you track Newland Labs, I know it's a very, not a very big stock in terms of the market cap. That and then Trent and BSE.
I think Newland Lab looks attractive. In fact, I do track the stock. Newland Lab, I think Lalpath Labs had a similar kind of a price uptick just about a few days back. So all of these stocks, they look very attractive. These are very strong breakouts which you're talking of. Now, whether it's on the back of results, etc. But when these stocks come out of 3-4 months of consolidation, that augurs extremely well for the stock prices. So would be very bullish on Newland Lab, and especially after today's breakout. Trend, I would still be a bit skeptical because the long-term charts are entering into an overbought territory. So would not be too much enthused into buying this stock at current levels.
Okay, Trent, not too much enthused, but let's welcome on board Jitendra Arora, the Senior EVP, as well as the Fund Manager at ICICI Prudential Life Insurance Company, joining us on the show. Jitendra, hi, good to have you. Let's begin by discussing the market setup, right? It looks like as we are getting into the Diwali week, the momentum is building up on the positive side, and probably we'll close towards the, the record highs that we had seen maybe by the end of the year. Would you concur with that view?
So for us, honestly, it's very difficult to say what's going to happen over such a short time horizon. Obviously, there'll be various factors which will be determining the course of the short term in the market. But yes, we saw a bout of weakness which was primarily because of a lot of FII selling, which we saw in the month of October. And from then, we have seen that market is gradually inching back upwards towards and showing some strength now. Again, I believe on the back of the domestic inflows and some easing off within the FII outflows. And I think that's what is taking the market where we are right now. But if I think about market from a short-term perspective, I think it's likely to remain volatile given what's happening globally, as well as because of the certain domestic factors. Globally, we have seen that even though the Fed has changed their stance marginally, soothing markets' nerves, and we've seen reaction on US markets as well as US rates, which has also then rubbed on to various other global markets, and we've seen a rise in equity markets across the world. That's one factor which is playing out over short term. The geopolitical uncertainty still remains high, according to me, so that's likely to again impact the markets. On the domestic side, obviously the flows are what is impacting the market. In addition to that, we also see some kind of volatility may creep into the market because of the elections which are there around the corner.
Absolutely. I want to just talk about one specific sector, Jitendra. This is Vinny joining in the conversation as well. Is, the retail side, because what's piquing my interest is Trend that has actually done quite well compared to other retailers. So, what is the sentiment that you're understanding from this sector as a whole? Other retailers have not done as well as Trend has done today. What is it that you're watching out for?
So honestly, I think in retail, it's more about the execution, how different companies are going about executing their strategy. And Trend there has done well. We've seen Titan also delivered a good result a couple of days back. So we've seen pockets of retail which have delivered well, but there are certain pockets which have not, which have been affected much more by the underlying slowdown on the retail side, and that's apparent perhaps in apparel or in QSR per se.
Do you think pharma has bottomed and there are opportunities which are emerging today? Of course, that sector is a top sectoral gainer. Alchem, Gland, these are some of the result reactions we are seeing. Even Oro Pharma has doubled this year. See opportunities within pharma?
We like pharmaceutical at this point in time as a sector because clearly what was happening in pharma after the sharp run up during the COVID, early part of the COVID was a slowdown in the earnings as COVID weaned off. But then we've started seeing that because of a lot of factory site closures, etc. We are seeing that in US market, the price erosion has come off, and we can see that finally there are certain pockets where firms are able to make a better price, and that's resulting in better volume sales as well as better profitability. This is what is helping a lot of Indian pharmaceutical companies which have a good exposure to US. And at the same time, we've seen that some of the key input materials where the prices had gone up over last 4 to 6 quarters, there the prices have started coming off, and that will also flow into perhaps the margins for some of the companies which are India focused. So overall sector is well placed. I think we should see sector perform over next couple of quarters as well. And from there, it will obviously depend on how the US market is playing out in terms of the pricing.
Right. Jitendra, other than pharma, is there any sector that is piquing your interest as of now? Obviously, previously you were talking also about this is going to be that election year that everyone is watching out for. So anything specifically on that front that you would look at as a theme?
So for us, we do not focus so much on the election year themes. We try to be much more about what we like as secularly, irrespective of what's happening in the short term. So from that perspective, I believe large private sector banks is one theme which we like. Though I agree that we will see some kind of earnings slowdown because as the interest rate will flow into their cost of fund, we will see earnings slowdown happen. But given that these are the franchises which have stood the test of time, and on valuation, clearly they are very attractive. So that's one space we like in general when it comes to the markets.
Space you do not like, Jitendra, which is the space you are underweight on a relative basis?
So IT is one space where we continue to remain underweight on a relative basis. And that is again driven by the fact that we still believe that some more slowdown may be there in the US. And that's likely to flow into the earnings for some of these companies. So we clearly think that the estimates for FY25 may be cut a little bit before we finally see the companies turn the corner on the earnings side. So that's one sector where we are underweight. But I must say that that call for us has largely played out over last few quarters, and I think in another quarter or two we should see that that space becoming attractive as well.
On that note, we let you go. Appreciate making time for ET Now. So that's the latest view coming in from the house of ICICI Prudential Life Insurance, betting on themes which look attractive from the point of growth and valuation right now. But on to an exclusive before we slip into a very short break, and this one is coming on Cipla and what it means for the stake sale as well. Cheryl is joining us to help us understand at what stage is that stake sale and what's the latest development on that front. Cheryl?
Cipla is a stock that will be in focus, and apart from Cipla, you'll also have Torrent Pharma that you need to watch out for in trade today. For the reason being, the sources have told ET Now that the trading window for the employees have actually reopened today. Remember that this particular trading window for the employees was shut in the month of August, and this could also be a clear indication that for now the Cipla stake sale deal could be likely on the back burner. Remember, from October 9th onwards, ET Now has been reporting that this particular deal could be on the back burner, or there could be some sort of a delay on back of valuation concerns. We are also heard from various sources the fact that Torrent may have put in a bid around 950 to 1,000 rupees per share levels as well. But for now, what we are picking up from our sources is that the trading window for the employees has opened from today. In In fact, we also wrote to the Cipla management to get their take on this particular story, and they responded, and I quote, that they're saying that we confirm that the trading window for employees opened today. So that's the significant development coming in for the fact that the trading window for the employees has reopened from today, and this particular reopening of the trading window for the employees could be an indication that the Cipla stake sale deal could be on the back burner. And remember, this is the first time since the month of August that this trading window for the employees has reopened.